All right, good afternoon, everyone. I just wanted to share a little bit about the options trading I have been doing inside of my Roth IRA. So as you can see here on the top, I have a Microsoft option, and the expiration, this reads a little bit funky, but the first two digits are the year. So it expires in 2020. And then the month is December and the 18th of December 2020, if you could read there. It is a call option, as you can see on the second line for Microsoft, and my strike price was $140. If I click on tax lots here, this is within the Fidelity environment. So if you guys aren't familiar with this look, the white and the green is a Fidelity type screen. I acquired this call option for $5,067. So each option simulates each option is worth the value of 100 shares of movement. So 5,067 divided by 100 is $50.67 a share. So with that, you actually add that to your call price. So 140 plus 5067 equals 190. So about $191 is my break-even price. I still have about 6 months to go on this, and I'm currently after hours today. The Microsoft price is $201.99, and so that kind of shows you it's in the money. It's above 191, and it's gained 21% in value since I purchased this contract. And if I switch back, you can see I acquired, on the left-hand side, I acquired these shares on February 10th. This was before Corona. This is just one single option on Microsoft. So with Microsoft approaching that $2 trillion valuation, market value, I went ahead and purchased another Microsoft call. This one was acquired on the same day, but I did kind of a different formula to it. I did three call options, and my strike price was 190. As you can see, the call of 190 up above in green. This one expires January 15th, 2021. So about 7 more months, and a break-even price is, let's do some quick math, simple math, basically $207. So I'm very close to break-even price. Just need about 2% more in value, since Microsoft is currently at $201.99. I have 3 of those. So you can see they've gained 43% in value, and it's mostly due to the time premium and kind of how close it is to being in the money. So I'm looking to hold this hopefully through a couple earnings seasons, and with us all remote working, whatever you want to call it, working from home, telecommuting, and all that. We're certainly using Microsoft Outlook a lot more, Microsoft Teams, and I certainly hope Microsoft Cloud Business is doing well, the Azure Cloud Business. So I'm hoping this will at least double in price by the time we get down to the November, December, and hopefully I don't have to carry it all the way through January, but if I do, that's kind of why I bought it, just to carry it a little bit forward. But like to my goal with the option is definitely to double my money, if not more, and we'll see how earnings go. Let's see when earnings is. So those I have a total of 4 contracts with Microsoft. The next earnings statement is July 16th after hours. So basically after hours, I expect Microsoft to report stellar, spectacular earnings, definitely hitting way above expected and punching Microsoft back to all-time highs where it actually should be. It was really devastated by Corona. It stayed stagnant quite a bit and had a huge drop right in the beginning after I bought these options. So they were very negative, maybe up until the last month or so. Late May, June, they started becoming in the money again. So I'm very thankful for that, and hopefully July will post good earnings, as well as October, which is kind of 3 months after that. And if I have to, then I would carry this into January for some additional squeezing of those earnings. And for my last option I will share with you is another big name you guys can all relate to. Okay, and this option is an Apple option. I bought one call option. It's about all I could afford. Let's see how much I spent on it. So I spent $4,100. So it's showing as 4106 on the left-hand side. And this option expires June 18th, 2021. So I have a full year left with this Apple option. Basically, what you do is you take the 320 call price or strike price, and you add the value that you paid for the option. So I paid $41.06 per share, $4,100. So if I add 41 to 320, the break even at June of 2021 would be $361. And today, June 22nd, 2020, Apple hit an after hours value of $362. So it's just now in the money, just barely in the money by $100 or $1 actually, $100 when you multiply it by the value of the option. But my option, because I have so much time premium left on this option, it is up 56%, which is really cool. I'd like to see this double, if not triple. I have a year left with it after all. So my whole goal is to bet on Apple coming into like the new 5G cycle, people upgrading their phones to reach that next level of connectivity, and also Apple wearables taking off like it has been in the past with the new noise canceling iPods, and then I forget what they're called. Hell. Maybe next level on the watches with the EKG function, and then there was rumor of Apple glasses. So definitely some more meat on the bone for Apple. Apple's a huge market share, and then they're kind of taking over their own chip design from Intel for a lot of their products, the Macs, everything on iOS. So looking forward to Apple developing more. So those are the options I've been holding. I did play some options before Corona hit. I played the Trade Desk, TTD, that was the ticker. And I did pretty well on a small option for that, really closely dated option. Maybe I had a month of time premium on it. But I ended up making about $3,000 on that. And then I played a Zoom option, and this was before Corona hit again. And Zoom was doing very well before that, so I made maybe a couple $1,000s on Zoom as well. So those were pretty fun, and looking to keep the fun going. These are considered LEAP options, long-term equity, something like that is the acronym. So I'll put the description of that below, but otherwise I hope you guys learned a little something, if anything, and leave your comments below, and let me know what you think of these options I have, and these companies, and what options you guys are playing, and how you guys do your strategies. Thanks for watching. Lance away, out. So real quick before you guys go, I will share a little bit more of that screenshot. You can see that top symbol is FBSOX, FBSOX, and that is a mutual fund. The top 10 out of 63 holdings are MasterCard, Visa, Fidelity, Fiserv, which I don't know what it is, PayPal, IBM, Global Payments, Automatic Data Processing, GoDaddy, Genpact. So this is an IT services mutual fund, and it's done very well. The life of the fund has done 13%, and the 10-year has 19%. So really great performance over the long term. So you definitely want to hang on to those long term. You can see my cost basis is $21,000, and I have an added gain of about $3,000 on that. And it's not really showing the true value of that because I have traded in and out of FB stocks quite a bit. So it's not showing how long I've actually held that, and which different tax lots have how much particular gain I have on each of those funds. And the next mutual fund you can see, one down, is FSCSX. This is Fidelity Select Software and IT Services Portfolio. This is largely technology based, as you can see in the name. Let's see, for the life of the fund, this has done 16%, and this has been around since 1985. For the 10-year, it has an average of 21%, so this is a heavy hitting mutual fund. So you can tell when I pay for my mutual fund, the expense ratio is a little bit higher, but I'm able to do that and justify it because I have those intense gains. The 1 year for this is 31%. So just an amazing mutual fund, punching way above the weight of any other mutual fund in Fidelity's portfolios. And let's see, the top 10 holdings out of 64 companies making up this mutual fund include Microsoft, Adobe, Visa, Salesforce, PayPal, MasterCard, Alphabet, Cognizant, Autodesk, and Oracle. These are companies with a huge, very large market capitalization over their competitors. So my bet is on these technology-focused stocks into the future as coronavirus kind of changes our environment and changes the way we behave. So a lot of contactless payments, definitely kind of steering away from cash transactions, as that money is more unsanitary than you can easily hand sanitize a credit card in a flash. So hope you guys learned a little something. Once again, this is Lance OA. Take care.